tariff on, tariff off, NVIDIA's earnings, and what's Dell doing after hours. Also some appeals court movements we have to go over. I think the best thing for us to do is to get technical and start going through some of these breadth indicators because that's all we can control. What's fascinating to me is that we keep hitting the same levels over multiple months over and over again. If I just show some of these levels, you're going to see how we're hitting them. We're going to drill into these in a sec. But also, some of these indicators, the breadth indicators, are firing at the same levels that they once were. Let's get into it. 27.5% of you that watch these videos do not subscribe. They come out at different times. Please hit the subscribe button. All notifications because they come out at different times. Let's get to it. I want to just start with the basics. We're going to start with about 2 weeks out on a 5-day or 5-minute chart rather. And here's election day. And here we are again on election day, just bonking our head once again on the 19th. And then look at where the battleground was. And we just could not get over that election day area. What's so fascinating is if you mark off when Itchy Speech was, the October 24 PPI, that started to try to become and is forming resistance again right in here. The big level for us, and I have it marked off, is the July CPI when we came out last July, month over month. That was negative. The PCE data was there, and that was the December contract roll. As soon as we got near that, we saw some rejection. There was actually, or some support rather. Now, here's where this gets cool. If I go to, let's go to a bear chart for a sec, and I'm going to clean all this off now. But here's what I thought was important. When you did get back down to this level, and you could actually make it that level, when you did get back down there, look what happened. Down, retest, and then rip. And I do think that's important to note that that level there, at the end of the day, on that NVIDIA news from earnings, did hold. So that is becoming a support level. So for those that trade it, you definitely want to watch that level very, very closely. I actually think there's a way here, and I could probably do it super quickly to just increase the text size there so you can see those numbers a little clearer. I would watch that level, and I do think it's important, but I also think this is important. We went from, okay, lost in court to tariffs, to appeals court and tariffs, to there's 10 different ways that he could do a tariff. Look, the same people that are going to tell you what's going to happen with tariff, they were Ukrainian-Russian war experts about 2 weeks ago. And before that, they were experts on the, what was that? The office crisis that we're about to go through. And before that, it was also the regional bank crisis. So while they're busy being experts, we're just going to watch the news come in and then watch the reaction to it, and then make the best decision that we possibly can. And I can tell you right now, you held. How long this holds, that's really a different story. And there's a couple key things here that I think we should go over. We can spend time on the NQ, but it's pretty much the same. If we have the time, we'll get into it. But take a look at this. In front of you are the top 40 sectors. And I threw Tesla in here as well, just so you could see what Tesla's up from May, coming straight across. Don't look at the numbers, but what I do is I have this little line in here. If I click on this line, let's make it white, and we'll make it as big as we can so that we can see it. Maybe that'll do it. No, that didn't do it. Give me 1 second because I'm really not going to have time to edit this out style. Come on, Boomer, get it together. Those internets, they're crazy. There it is. So you see that line? That's going to be our zero line. And what I want you to do is understand that there are 40 sectors that are in here. Now, we're not going to count them all, but if you just did the simple thing and said, okay, how many of those sectors since May are down? You say, well, let's just highlight that area. It's pretty obvious that we've been basing out, right? Okay, now watch this over the past week. And what I did here is I went to the 19th. And just to get a sample. So if we'll do it from the 19th to the 30th, because it's going to get worse. And you can already see it's going to get worse. But if you go back and look at the original graph, and there's all different ways to look at breadth. But if I take the top 40 sectors and then said, okay, well, how many are down? Well, obviously, this one's down more than the majority, right? I get that. But we would be really clear in understanding this, that the majority of up over here versus what you had in the other sector, it's pretty darn clear what's going on. And I'll change the colors of this just so that you're not completely baffled. But you would be looking at this and going, well, there's clearly less in the past 2 weeks that are over your zero line, which is the green line, versus what's down. So that would tell you that in the past 2 weeks, we've lost more sectors than we've gained more sectors for the month. That's really important because that tells you no matter what, the sectors are not broadening out. See, everything that I do, and this is just how I trade, you should do what you're comfortable with, is top down. Meaning I go index, and then I go sector, and then I go stock. And the reason this is so important is if I lose the sectors, then all of a sudden we start concentrating into more of these names. I'm not the only one that does top down. What does that mean for you? That means no matter how you look at breadth, and we're going to look at it a bunch of different ways here, this is telling you that the breadth is getting worse. We're starting to categorize into more concentrated into very specific, and that's exactly what's happening. And when you look at those sectors, you can watch right from here, you can see where you're at. It's retail, NASDAQ, biotech. You have the miners that are up, but it's not every single sector that's up. It's not even the big ones that you would think are up. And of course, I just threw Tesla in here just to kind of put it into perspective. But once again, for the past 2 weeks, it's gold. And not a lot of people would think that. Some would, but not a lot. Now take a look at it this way. In front of us is the ADL, the Advanced Decline Line. And it's pretty much exactly what it says. This is the New York Stock Exchange Composite. And what we'll do is we'll just change the color of this to, we'll just make it white and big so that you can see that. All right, cool. And you'd be like, okay, well, that looks fine. And, this is trading up. Okay, you can do it in different times over the hours. So if we look at where we're at, from where we bottomed in the market to where we topped. So here's the bottom, and that was the bottom of what? Advanced decline line. All right. And then you come here. And there's the top. And we're going to make these super big so you can't miss them. Is there an issue? No, it's doing what it's supposed to do. In other words, it's following perfectly. The New York Stock Exchange Composite is following the breadth perfectly. There's not a divergence, that we can see. And if we drop this down to a different time frame, you're going to look at this and you're going to see something very similar. No, you really don't have anything that's changed here, do you? But the breadth has definitely fallen off. And if you look back to here, it's right around that 17th, which was about 2 weeks ago. And you'll remember my sector graph when we just went through that. So I think that's pretty telling, don't you, that the advanced decline is actually falling in line with the sector rotation. So that is telling us what? That, yeah, we're not really having a divergence, but we are in a situation here where we're just not having as many advancers as we are decliners. And that means what? That the breadth is getting weaker. Now, I use the following as a momentum indicator. I do not use it for the following, but a lot of people use it for this, and I just want to point it out. They'll use it as a valuation. So they'll use RSI and say, when I'm below here, I am undervalued. The market is undervalued. It's how it works for them. When I'm over, I'm overvalued. I don't use it this way. I'm showing you one way that you can use it. What I would say is that valuation tends to work off. And I view it as a momentum indicator. I would view it and say, if I'm over 70 and I go under, it's a short-term sell signal. And I'm going to do this on a 4 hour. So if I show you those areas over and over again where that happened, and I'll just click on, which one is it? This one, Luck All Drawings, keep drawing. There we go. Yay. And we just look at those levels, and we're not going to see it too often because, believe it or not, it doesn't happen that often. But what you will see is in these areas, and you can go higher. You can. That can definitely happen. But at best, you're going what? Sideways throughout all these. And my point in showing this and spending the time with it, you can actually even see the divergence there. God, that's perfect. Next time someone says they don't believe in divergences, just send them that. You don't even have to say anything. But if we just take a second, oh boy, this is where it gets nuts. Oh boy, hold on. Get rid of that bad boy right there. And you just look at that. You can see real clear, like, oh, hey, maybe I shouldn't be going, goofy up here. And again, we could get into this, and we will when I do that advanced RSI video that I'm going to publish. I got a lot of comments on that, so I will post it. I have a negative divergence here, even though it doesn't look like it's falling in line. It's commensurate with where you're at. And I'll show you how to figure that out in that video. That's why I always tell people to subscribe, because there are a lot of other videos that are linked to what we do here that actually explain how to do this kind of work. And what you're trying to do is you're trying to just get a lay of the land and go, is this really where I want to start, pressing my bets? And to me, not really, no. This is kind of an area where you want to watch and see what happens. But wait, there's more. In front of us is the McClellan Summation Index. And I have gone through this with everybody ad nauseum for a very long period of time. And what I would like to just point out is the oscillator. So in other words, you have the oscillator, and then the McClellan oscillator, the summation measures the oscillator. I'm not going to get into it all in this video. What I want you to understand about the New York Composite in regards to this is that when this crosses and then breaks the zero line, you don't want to be long. And it's not that common, but when it does happen and you break the zero line, you want it to start turning back up before you get involved. And here's a situation where it's happening. And the reason that this is so important is one, it measures breadth, but it takes a long time for these to cross. A matter of fact, to put this in context, if you bought this cross, and we go back and look at this 2 weeks from now and said sold that cross, and you look at the difference from, let's just take that close to that close, you're up 8%. And I would argue that the next time that this flips back, that the percentages is definitely less than 8% on that. It's pretty telling. Now, it's not a be all end all, nothing is. You can see it here and then it broke, but you had a lot of different issues here. You can see where it broke here and then it held and rode the zero line and we just rode with it. And that very well could happen here as well. But to not pay attention to this is a huge mistake. So we have to watch this. Now, one of my favorite measurements, and I do want to go through a couple names, especially with what's going on with Dell, but one of my favorite breadth measurements is to take a look at where we are in the pecking order. And I'll explain what I mean by that. So you have a 200, a 50, a 20, and a 5. And what we're always looking for is short, intermediate, medium, long term. And the reason that you're doing this is that nothing tells you where you are on a breadth indicator like this. There's nothing like it. And one of the things I was telling people to be really careful of, and we talked about it early in the week. We said, hey, we're at a 5 or a 6 down here, and this is where you bounce. So if I did our trusty level and we drop it right down here, and I think that's kind of aggressive how big that is right now, don't you? So I guess we'll go back to, well, we can make that gray and we'll change the color there so you can see the contrast. But when you get down to these levels, you can bounce, but you want to be over everything else. So in other words, you want it, when this bounces, the 200 needs to be over 50 for it to be sustained. The 50 needs to be over 50. You need these to be over those levels. Why? Because you need the underpinning so that when it rolls back over, it holds. You don't have that right now. And most people are going to look at this and go, well, I have the 20, the 20 is not enough. The 50 is not enough. It's the 200. You need them all. If you don't have them, you don't have the correct underpinnings of the market. And that's when you'll start seeing that deterioration. That's when you'll start seeing people put trades on and they can't understand why those trades aren't working. Super important concept to get. And I can spend more time on it if you want. But let's just shrink it down for a sec and say that if we were going to make our decisions from a day trading perspective, and this is one of the things I always go over in the room, especially when newer people join the room. If you are on the wait list, look for a invitation over the weekend. I'm going to send out a badge. If you're trying to get into the community, there is a link in description and I pin it so that you can also just get on the wait list. But here's where I'm going with this. When I'm here, if you're a day trader and you're short and you start seeing that stocks below this are around here and you're short, you have a problem. Okay? It doesn't mean that it's going to stay there, right? You can have a problem, fix the problem, and roll right back down. But you have a problem. And when they're all aligned that way at trough valuations, that's usually where bottoms are formed. And you can see that for yourself. I mean, it's not rocket science. We've marked off these levels like when you were down here on the 20, on percentage of stocks below the 20 and you're at a 2, like you're near a bottom. These were all like bottom readings. And we went through that for those that watch these videos pretty extensively. Like, hey, you're at like a 5. Like there's only so far that these can go. They can only go so far. And then you'll just snap back, similar to rubber band. And it doesn't mean you won't roll over again, but you'll just rotate down in the bear market like you would in the bull market. But from a short-term perspective, you work this off. You bounce back to 80, you're trying to hang in here. Here's the problem. While this is bouncing, your 20 days rolling over. So while the 5's rallying, the 20's rolling over. That means you're losing more intermediate term names to the 20 and you're gaining more on the 5. That's not where you want to be. What you want is you want the 5 to be higher and the 20 to be higher. And that's not what you're getting. So in other words, what you're getting is you're getting rally in the beaten down names and the leading names are rolling over. That's what this is telling you. So when we look at this from an intermediate perspective, and if we were just to use this as the indicator, well, we would see the drop right here. We would see it try to rally. And we would look at this from a breadth perspective and go, well, and again, you could use this from a divergence standpoint. And I don't all the time, but it does give you a real clear indication here. See where you're at right here? See how you're right around the same area, but you're significantly lower? So you are between an 87% to a 67%, and you're roughly in the same exact area on the S&P, right? That's a problem. That means the breadth of the 20-day has deteriorated in that situation. That's not good. I've seen good before. It doesn't look like that. You could do the same thing here on the 50. And of course, you got to 77, which is one of those higher readings. And this is really what you have to be careful of. If you're too far, too fast, is that a thing? Not really. But when you get to a level and you see that, and like, oh, look, we got there in March 24 and we rolled over. Oh, we got up here before and we rolled over. And then you correlate that with other things. You're fine as long as everything else correlates to that. But when they don't, and you go to the long-term indicator and you're like, well, wait a minute, 50% of these names aren't even above the 200-day moving average, and I got to a 70, that's where the problem comes in. So the biggest thing for you to remember when you look at the breadth, if you want to take one thing away from this, here, click on that. Boop. Promised I wouldn't make that noise again. Promise broken. If you take a look here at that 50 line, you really want to watch that. Now you can see how you tested it here, failed, below, pushes through, rejected. You don't want to lose the 50. I can't stress it enough. Institutions look at this, and when you break that, they just put the brakes on. You know all those CTA levels that you see out there? People always talk about CTA levels, and CTA is a buy or CTA this. They're all triggered. CTA is a fancy word of saying we have a system and we follow the system. I can put any money in the world on that part of their system is this. The other one is this. I know it for a fact that all institutional trading desks look at these three things. I'll tell you what they are. They look at this percentage on the 200, on the 50, and they all look at the RSI. They all look at the RSI, but they look at the RSI with the standard move. So in other words, where is that? So they'll look at it on a standard. They'll look at it on a daily, and they'll look at it when it's over 70. To that usually means to them they're going to put the brakes on. And what's crazy about that is you'll actually see they just start talking about it on the desks. Oh, we're at 70 on and they use the 14, they use the standard things. So you're at those levels where you're seeing deterioration of breadth, and some of your long-term things are a little wonky, aren't they? All right, now, what happened today? And I've got some trades I want to walk through, but I'm going to save them for Saturday's video. This doesn't get any clearer. Here's NVIDIA. Opens, tests, tries to get over, fails, breaks down. That's it. That's all she wrote. You broke there. There's your orb. Tries to rally, can't. And I'm just going to be Captain Obvious here for you and drop a VWAP. When you start to see this deteriorate, and people are like, well, this didn't deteriorate. Nobody bought it all day, guys. Like, it sold down all day. Believe me, I wanted it to go higher as well. You can see the level right here. You can see when we broke down at that 130 time frame right here. Nobody wanted to go near this thing. Nobody. And that's super important to get. Leading name, nobody wanted to go through it. Now, option expiration tomorrow, we're going to have to watch it and go from there, but I think you're setting up for a gap fill. The other thing that I would say, and this is really important, and more important than some of the other stuff I want to cover, and I'm probably going to wrap with this, because I really want to get this out there. Because when I see this, you want to just be careful. And I said this on the public pre-market today for those that attend those public pre-markets, that they go between 8:15 to... I try to do between 8:15 and 8:30, but you want to watch the names that came out, and then you want to watch how those names acted, the ones that came out with earnings, and then watch how they acted. And you are seeing a lot of the XLY names. They lifted, but they didn't really have follow through to. And now you're going to go into a couple other things like you had this morning, obviously, but tonight you're going to have Dell. Now, Dell was good, and they're going to give this reading where earnings are off. Their revenues are up. They got a new contract. I'll just tell you exactly what it is, but their gross margins are off because I think they cut it in order to get in there. And of course, it looks great, but if you really look at it, it was one bar that spiked up, and then that's not even like, here's where you're at. And then that was it. You had one bar of awesomeness, and then you broke. And then right from there, that break, that was it. And since then, you've been trending down. And the way this is trending, quite frankly, it looks to me like by the end of the call, this thing's probably going to wind up trending all the way down. And it was a gross margins issue. Revenue was good, and they actually got it higher. What does this all mean when you start looking at like AEO and how these names are breaking down, and what does it mean? So I always look at my leading names, and this is way more important than anything. So back in April, we bought NVIDIA back in here, and the name did exceptionally well. We held it in the earnings. We're still in it, and it's doing great, right? All right, cool. But then you start looking at some of these others that I bought. Like I bought Ferrari down in here, and then it got up to this level, and I couldn't get through. When I start to see this where I can't get through on something like Ferrari, so we locked that in. Then we did this, MSTR. And I really thought we were heading back to here. I really thought we were heading back to this area. Maybe you will, maybe you won't, but a swing trade's a swing trade. So we bought it around 317, traded it up, and then we got out in here because it did something. And what I'm getting at is, I think we made like 80 something on that, 80 points. So like for these swing trades, they work great. This we made like 20 points on, and then we got stopped out of. Why? Because it just rejected, and you keep breaking this level in PTR right here. I'm not gonna wait for someone to tell me it's wrong, right? Like it's already telling you, when you start looking at like the 3, the 5, and the 8, and you're up near the high of a chart, and the 8 and the 5 to 3, remember red means stop for those that watch these videos. When you start to see that stuff, you're like, okay, what am I waiting for? To lose money? No, I can always buy it back. I mean, you can always buy a stock back. You can't always get to sell it for the same price, right? Well, that just makes sense, sure. When your leading names are stopping you out over and over again, and we got stopped out of this, we bought this at like 36 and got stopped out up here at like 53-ish. When that starts to happen, you need to put the brakes on. And that's really where I'm going with this. And it was funny because I heard that a lot recently on the calls. And I can always tell the pre-market calls because I take a ton of questions. And people were saying, oh, he's bearish. I'm going to go listen to the other guy. He's bullish. This kind of made me laugh. Like, go and find somebody that agrees with you, whatever. Here's the point that I'm getting at. When you're leading trades that you were making money on, when they start reversing, it's not up for you to go back and change your mind and say, well, I'm a long-term investor now. You have to listen to what the market is telling you and go from there. That's it.